Today is Sunday, July 10, 2022. Let us take a look at today's crypto headlines. BTC bull Michael Saylor, Ethereum is obviously a security. US dominates crypto ATMs installations and BTC hash rate worldwide. Bitcoin price surges to $21.8 thousand, but analysts warn that the move could be a fakeout. VC Roundup, Web5, Metaverse sports and Bitcoin monetization startups generate buzz. Please like, subscribe and turn on the notification button to keep supporting our channel. BTC bull Michael Saylor, Ethereum is obviously a security. The MicroStrategy CEO argued that ETH is a security as it was issued via an eco and its network has had many fundamental changes over the years. MicroStrategy CEO and Bitcoin, BTC, bull Michael Saylor said that Ethereum, ETH, is obviously a security as he doubled down on labeling BTC as the only commodity in the crypto sector. In an interview with Altcoin Daily, Saylor was questioned on his take regarding the classification of both BTC and ETH as commodities by U.S. senators such as Kirsten Gillibrand and Cynthia Lummis, along with figureheads from the Securities and Exchange Commission, SEC, and the Commodities Futures Trading Commission, CFTC. Saylor provided a lengthy rundown on what he thought are the fundamental differences between the Bitcoin and Ethereum networks. As he suggested that only the former has remained unchanged over the years. I think Ethereum is a security, I think it's pretty obvious, it was issued by an eco, Teresa management team. There was a pre-mine, there's a hard fork, there's continual hard forks, there's a difficulty bomb that keeps getting pushed back. The CEO argued that the constant need for software upgrades on a network driven by a team or entity represents an indicator that ETH is a security. He pointed to the design of the long-delayed difficulty bomb, which he said will murder the entire ETH mining industry as examples of such. According to Saylor, for a digital asset to be classified as a commodity, it needs to be backed by a completely decentralized protocol where nobody can change it even if they wanted to change it. For it to be a commodity there can't be an issuer, and the truth is you can't really make decisions. I mean, one of the fundamental insights in the crypto industry is that the fact that you can change it, is what makes it a security, he said. Securities are generally understood as fungible and tradable financial instruments that are used to raise capital in public or private markets. While commodities are seen as goods or assets that have a monetary utility. Assets like gold and silver are seen as hard commodities, while soft commodities are goods such as rice or tea. Saylor reiterated that BTC is a commodity as the core of the Bitcoin network cannot be altered, much like the physical makeup of gold. If you want to establish yourself as a digital commodity, then you're trying to create something like gold in cyberspace. Despite Saylor's arguments, however, the Bitcoin network has seen multiple network upgrades over the years. The most notable one in recent history was the Taproot soft fork from November 2021, which aimed to improve Bitcoin's scripting capabilities and privacy. Asked about his thoughts on other altcoins such as Cardano's native token ADA, Saylor once again echoed his maximalist sentiments, stating, "I think all of the proof-of-stake networks are securities and they're all very risky. It's above my pay grade. The regulators will decide whether or not they allow them to continue or no they don't allow them to continue." The MicroStrategy went on to note that one of the major reasons he favors BTC over all other crypto assets is that he holds concerns over altcoins being non-compliant security tokens that could get regulated out of existence. Saylor's MicroStrategy has continued to snap up BTC despite the tanking value of the asset in 2022, and as of June 29, The firm held 129,699 BTC worth around $3.98 billion at the time. US dominates crypto ATMs installations and BTC hash rate worldwide. With China out of the competition, the US picked up the slack to become the highest BTC hash rate contributor, representing 37.84% of the total mining power by Jan 2022. Despite the myriads of state and federal regulatory hurdles faced by crypto businesses in the region, the United States plays a major role in preserving the Bitcoin, BTC, and crypto ecosystem. With China moving out of the picture following a permaban on crypto, the United States maintains the top position in terms of hash rate contribution and ATM installations worldwide. Prior to cracking down on BTC mining, China historically represented over 50% of the total hash rate up until February 2021. With China out of the competition, the US picked up the slack to become the highest BTC hash rate contributor, representing 37.84% of the total mining power by Jan 2022. As shown above, Chinese miners resumed operations in September 2021. However, the miners in the US continued to dominate the space while increasing their hash rate contribution month over month. In addition, the US is home to the highest number of ATM installations, representing nearly 88% of the total crypto ATM installations worldwide. Over 90% of the overall crypto ATMs installed over the past several months are in the United States. Data from Coin ATM Radar confirms that the trend continues to July as the US saw the installation of 641 out of the 710 Bitcoin and crypto ATMs installed in the first 10 days of the month. Further strengthening North America's position in the crypto ecosystem, Canada represents the second largest network of crypto ATMs after the United States. Outside of the Americas, Spain houses the highest number of crypto ATMs, 210 or 0.5% of the total active ATMs. The confluence of a global chip shortage and the coronavirus pandemic momentarily shot up prices of the most important part of a mining rig, the graphics processing unit, GPU. However, with prices falling down below MSRPs and a hash rate that complements the fall, miners found themselves a window of opportunity to procure their dream mining equipment. In May alone, GPU prices dropped over 15% on average, additionally forcing sellers on the secondary markets to bring down their exorbitant prices on used mining rigs. Bitcoin price surges to $21.8 thousand, but analysts warn that the move could be a fakeout. Traders rejoice after BTC price spikes 7% to $21,800. But analysts say the macro downtrend is likely to prevail for the foreseeable future. Hope springs eternal for many crypto investors after the market saw positive price movement on July 7, alongside gains in the traditional market. The green day in the markets comes amid a backdrop of increasing jobless claims in the United States, which is a possible signal that the pressure on wages may have now peaked, according to Harris Financial Group managing partner Jamie Cox. According to Cox, a continuation of this trend could result in financial conditions that are tight enough to allow the Fed to throttle back on the scale of rate increases. Data from TradingView shows that after trading near $20,400 for a majority of the day on July 7, the price of Bitcoin, BTC, spiked nearly 7% in the afternoon hours to hit a daily high of $21,860. As the crypto faithful attempt to navigate the choppy waters of the crypto winter in search of a market bottom, here's what several analysts are predicting could be next for Bitcoin. The trend remains negative. Twitter user Roman posted the following chart noting that many are becoming euphoric and bullish as we have repeated similar candle patterns for the last 8 months. In Roman's view, this is just the latest in a series of fakeouts that will trick a lot of traders into believing the bottom is in while in reality, the trend remains negative. Roman said. Volume decreasing in a range is consolidation for continuation of trend. Not to mention thousands of inflows to exchanges before each top. A recovery above $23,000 would be bullish. Another trader who holds the view that the trend remains decidedly negative is pseudonymous Twitter user Gilberto, who provided the following chart noting that Bitcoin's price recently broke out of a pennant formation. As for what the potential price path for Bitcoin could look like if it continues along the downward trend, market analyst Crypto Tony posted the following chart which outlines a worst-case scenario that could see BTC bottom near $12,000. Crypto Tony said, I do not think we see the start of the next impulse until later next year and a new bull run peak until 2024 to 2025. I am already positioned at $22.24k and will add if we drop to $17 to $15k. Traders watch the 200-week moving average. When it comes to metrics that have been reliably used to help determine market bottoms, the 200-week moving average, MA, is one of the most popular and widely cited indicators that traders use to identify good buying opportunities. With Bitcoin now back below its 200-week MA for only the fourth time in its history, speculation has begun to mount about how long it will take to recover back above this line and what the appetite for trading will be like once it reaches there. In response to this possible scenario, independent market analyst Michael Van de Poppy posted the following tweet outlining what he thinks might occur once the 200-week MA is recovered. The overall cryptocurrency market cap now stands at $957 billion and Bitcoin's dominance rate is 43.1%. VC Roundup, Web5, Metaverse Sports and Bitcoin monetization startups generate buzz. PolySign, Mash, Floor, Euler, Trinsic, Kive and Atmos Labs headline the latest funding deals from the world of blockchain and cryptocurrency. A lot has happened in the Bitcoin, BTC, and cryptocurrency market since our last edition of VC Roundup. The monumental collapse of the Terra ecosystem spilled over into other segments of the digital asset market, exposing overleveraged traders, lending platforms and venture capital funds. In the process, Bitcoin's price plumbed new lows, falling below the previous cycle's peak for the first time in its history. Despite macro headwinds inflicting pain on the crypto markets, venture capital firms are still investing in the industry's most promising startups. The latest edition of VC Roundup highlights funding deals for digital asset infrastructure providers, non-custodial crypto protocols, payment solutions and decentralized identity management companies. Digital asset infrastructure provider closes $53 million round. PolySign's quest to bring institutional-level crypto custody solutions to investors has received backing from several venture capital firms. The firm recently raised $53 million in Series C financing backed by Cohen Digital, Brevin Howard, GSR and more. In addition, the company secured a $25 million credit facility from venture firm Boathouse Capital. Although PolySign didn't specify how the funding will be allocated, the Series C was closed around the same time that the firm acquired digital asset fund administrator MG Stover. Bitcoin startup raises funds to monetize creator economy. Bitcoin and Lightning Network payments platform Mash raised $6 million in seed funding in June as part of its ongoing efforts to remonetize the internet for developers and content creators. The funding round was co-led by Nick Carter's Castle Island Ventures and Whitecap Venture Partners, with additional participation from Maple VC, Strategic Cyber Ventures, Aquanow and Space Cadet Ventures. The Mesh platform allows developers and content creators to offer customers so-called pay-as-you-enjoy pricing options facilitated by BTC and Lightning Network. NFT app Floor raises $8 million. Non-fungible token application Floor has closed a Series A investment round valued at $8 million to advance its mission of making NFTs more accessible to mainstream users. The funding round was led by Sixthman Ventures, with additional participation from B Capital, Worklife Ventures, Collab Plus Currency, Crypto.com and others. Floor said it will use the funding to accelerate development and bring more utility to NFTs. Euler receives major backing. Non-custodial crypto protocol Euler has closed a $32 million funding round that was led by Hound Ventures and included participation from FTX Ventures, Coinbase Ventures, Jump Crypto, Jane Street, Uniswap Labs and others. The funding will be injected into the treasury of Euler's Decentralized Autonomous Organization, or DAO, which is being rolled out in 3 phases. Euler is a decentralized finance protocol built on Ethereum that allows users to lend and borrow crypto assets. Web5 and decentralized identity attract VC interest. Decentralized identity protocol Trinsic recently closed an $8.5 million seed round to continue building its so-called user-controlled identity products. A spokesperson for the company said Trinsic's products give real-world utility to Jack Dorsey's Web5 ambitions. A vocal critic of Web3, the former Twitter CEO announced in June that he is bypassing the 3rd iteration of the Internet in favor of Web5, a new Bitcoin-centric model for identity management. Kive closes $9 million raise ahead of mainnet launch. Web3 archiving protocol Kive has raised $9 million in funding ahead of a planned mainnet launch slated for the 4th quarter of 2022. The funding round, which had participation from Distributed Global, Wicklow Capital, IOSC Ventures, Blockchain Co-Investors, Wobi and Curabur and others, will be used to integrate more ecosystems into Kive's so-called decentralized data lake. Several blockchains currently use Kive, including Avalanche, Zilliqa, Cosmos and Polkadot. Atmos Labs targets metaverse sports with seed raise. Play-to-earn developer Atmos Labs has closed an $11 million seed round to continue building metaverse-focused sports games. The investment round was led by NFT-focused venture firms Fermium, with additional participation from Animoca Brands, Collab Plus Currency, FBG Capital, CoinGecko Ventures and several others. Atmos Labs is looking to bring esports to a global audience by creating immersive gameplay in the metaverse. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.